We have all heard the real estate sayings, it's the seller's market or the buyer is in control, but which one is it? As a buyer or seller in today's housing market, have you wondered who determines the market? Hi, I'm Kristin Menath with the Menath Real Estate team. It seems like not a day goes by without headlines about the housing market, whether it's mortgage rates or housing prices or inventory. It can be quite confusing to figure out who's in the driver's seat of all this. So what data do real estate professionals analyze when looking at the market? It comes down to supply and demand of inventory. Typically, when supply is low and buyer demand is high, it's a seller's market. If there's an oversupply of listings, that can indicate a buyer's market. An oversupply shows demand has cooled, shifting control to the buyer. To break it down further, real estate professionals look at absorption rate of a specific area. Experts say that if there is less than a 5-month supply of homes available, it's a seller's market. A 5 to 7 month supply indicates a balanced market, and anything more than a 7-month supply means it's a buyer's market. However, I don't entirely agree with this. Each area, neighborhood, city, and state can vary. So, for example, San Diego. If a home is on the market more than 30 to 45 days, it's likely priced too high. Although experts have their opinions on what defines a seller's or buyer's market, it's crucial to consult a seasoned, experienced real estate expert to show you the local data. Nationally, we have been in more of a seller's market with lower inventory levels. According to Realtor.com's economic research analyst, Hannah Jones, the market is still leaning toward a seller's market, but has gained balance since COVID when the market was red hot. The last true buyer's market was in 2012 when the housing inventory was a little over 7 months, meaning it's been 12 years since supply outweighed demand. However, this market is not a slam dunk for sellers. It's also challenging to be a seller. Most sellers hold mortgages with lower interest rates than today's rates, and that means if they sell, they would be purchasing in a higher priced market. So while it's more favorable to be a seller in today's market, sellers, just like buyers, face high rates and home prices too. Experts say the market feels more like a limbo market where both buyers and sellers feel conflicted about the overall economy. But either way, don't give up. Owning real estate is still the #1 way to build your net worth over time. One thing I stand by is this: if everyone is doing something, do the opposite. Back in 2009, right after the real estate crash of 2008, houses were sitting on the market for months, even at competitive prices, because buyers were too scared to make a move. No one back then would have imagined that the same house they were passing up for $275,000 would now sell in 2024 for $1 million. Don't go with the flow. Think long-term and consider how today's market can align with your family's future goals. Want to stay current with the San Diego real estate market trends and tips? Follow and subscribe now, and we'll keep you updated. I'm Kristin Menath with the Menath Real Estate team. Remember to make your move with Menath.